Hey everybody, thanks for stopping by thetradinganalyst.com. This is Taylor. I'm going to take a look at a bunch of charts here. I'm going to give my analysis, and I'm really just going to go over some levels here that you really need to watch here on these specific charts here coming up in this coming week and in the following weeks after that. I'm going to go over my analysis and show you exactly what I think is going on here. But before we get into this chart here, or these charts rather, what I want you to do is visit us here on the home page of the website and just get to know us better. Get to know us better by seeing what the service is all about, what you're going to get when you sign up and join today with the premium membership community here. The other cool thing about visiting us here on the home page of the website is you're going to get to know us better by seeing what other people are saying about the membership, because this is my service. And of course, I think that I have the best service out there. And I really, really, truly believe that, guys, because quite frankly, our clients are making money. Our clients are happy, and they're happy enough to leave us these glowing testimonials and reviews. So it's good to see it from a different perspective other than my own, to see what other people are experiencing here with inside the service that you're going to get when you sign up and join. And the other cool part, guys, is that when you sign up and join, you're actually getting the same trading alerts, the same alerts that these guys are getting and talking about in their reviews and testimonials. So when they're talking about the gains they're making and they're happy with the service, it's because of these alerts. And these alerts are something that you're going to get instant access to when you sign up and join the premium membership community, guys. So if you're sick and tired of losing money in the market and sick and tired of being inconsistent with your trading, we've all been there. Don't worry about it. But you can do something about it right now by joining this community and by getting these trading alerts. It's not your fault if you haven't been successful up to this point. It really isn't. I really want to tell you that. But it will be your fault if you don't take action and make the kind of change that you need to make in order to start making money in the market and to start making winning trades. And this is your opportunity to do that, okay? Because I'm a professional trader. I've been trading profitably in the market for almost a decade, and I'm handpicking these trades and giving them to you. I'm sending out a text message. Whenever I place a trade, I'm giving you that trade, and you can do whatever you want with that trade. All you have to do is have a cell phone, and that's it. I'm handling the analysis. I'm handling the charts. I'm handling everything for you. You just have to have a cell phone so you can receive these alerts when I send out these alerts in real time to you. That's it, guys. So the cool part, the other thing I want to mention here is that we are raising the prices really soon. And the reason is because we're growing at a really rapid pace. We're seeing a big jump in membership lately. People are really catching on to the service that we have to offer here. And the reason we're raising the prices here is because we want to be able to serve each and every one of you on an individual and high level basis. And that's why we're raising the prices here. I mean, you want us to serve you at the highest possible level, right? Yeah. So in order to do that, we're raising the prices here. But right now, the prices are still really low, and you can get in while this low rate is around for a very short amount of time. So guys, you need to take action now so that you don't have to pay that higher rate that we're raising it to. I don't want you to miss out. And I also don't want you to miss out on the alerts that we're going to have coming up this week and tomorrow and the next day, because the longer you wait, the more you're going to miss out on a lot of things, on the trades, on the alerts, and also you're going to have to pay that higher price. So guys, take action now at the end of this video. All right, so what should we do next? Let's get into these charts. All right, so the first one we're going to talk about is Starbucks. And Starbucks here, this is one, it's an interesting story here because just last week on Wednesday, this was Tuesday actually, Tuesday we had news that Howard Schultz, the CEO, was out. He's gone, no longer CEO. But if you notice here, the very next day on Wednesday, this big green bar, we had a huge bounce and we closed over the previous day's high. All right. To me, this is a reversal signal here. All right, guys. We had our chance to break down. All right. We had our chance to break down the next couple of days as well, but we haven't broken these lows. All right. So in my opinion, Starbucks had its chance to break down. It had, quote unquote, bad news. And if you know me, I'm not big on news. I'm big on price action, because it doesn't matter what we think about the news. It doesn't matter what anybody thinks about the news. All that matters is how the market and the people that are controlling the money in the market reacted to that news, and they had their chance to sell. But instead, we just saw a one-day dip and then bounce right back the next day, and we're holding these gains. We actually made a higher high up here than the previous few days right there. So to me, this is bullish. It had its chance to break down. I think it's going to head higher from here based off of that analysis. So, and again, this is a long-term thing. I'm not saying it's going to break out huge tomorrow or anything like that. It may need a little bit of time. The next one we're going to take a look at is, let's see, Intel, INTC. And this one is one that could be in a little bit of trouble. And the reason is because we're seeing a rising wedge pattern. All right. So we're trading up wider. Okay. Getting tighter up here. And we also have what I like to call a false breakout. Okay. This term is thrown out a lot and people misuse it all the time. Okay. But this is what a false breakout is. False breakout is when you have a clear level of resistance. So here's a resistance level there. Boom, it hits it there, several times right there. We break over it right here, okay? Clean break over resistance, all right? Okay, not the very next day, but a few days later, we break back under it right here. So it's a clear rejection of this price level up here. So we have the false breakout and we have the rising wedge pattern. To me, Intel is at the very least, status is caution here up at this price point. It's made a good run. If you're holding it, if you're trading it or investing it, you can use a trailing stop. All right. I'm not telling you how to manage your money. It's your money. But to me, if I were holding this, and I'm not, but if I were, I would be trailing my stops soon here, and then you can always get back in if it firms up once again. But to me, it's looking like it's a little bit vulnerable at this point, given that pattern and that false breakout. The next one we're going to take a look at. Let me look at my notes here. Tesla. Yeah, Tesla. So Tesla here, big move up right here, but we're coming into a resistance level right here. So it started back here in September of 2017. We've got a hit there, and look at where we're at right now is right against that resistance point. So to me, Tesla could be taking a little bit of a pause at this point. Now, with that said, if we break over the highs of today, all right, if we break over the highs of today, to me, that would be a sign of a continued breakout. And I think that we'd be looking at a pretty big breakout, potentially into the previous all-time highs that we saw up here, just shy of 400. You can see it hit there and it hit right there. So let's kind of see what it does from here. If it firms up and breaks the highs of today, then I think it can break out. But if it gets some kind of a gap down or a reversal candle right here, I do think that we'll be looking at some lower prices here. And just for the short term, The conservative target would be about 308. There's previous resistance there, and if we head back down, it would likely get at least a short-term bounce against that 308 level. So this is really kind of for you short-term traders, for you short-term option traders. This is going to be a good chart for you. So the next one we're going to take a look at, my notes, AT&T. And this is one that we traded just recently, and I'm going to I'll go over that trade first so that you guys can kind of learn the strategy that we use to make money on this one, and for my clients to make money as well. And then I'm going to go over the levels here more recently, so you can kind of get a good idea of how to profit from this one moving forward. So we've got the entry down here on this day. I'm going to move that over. The entry was on this day right here. So the strategy here, guys, and I'm not revealing the entire strategy because the only people that get the entire full strategy is our clients. It's a very powerful strategy, but I'm going to show you a very important part of the strategy. So it's a 3-day pattern here, and there's more. Again, there's more to it than just these 3 days, but the key part here is this 3 days is day 1 is a red day, day 2 is a red day, closing below the low of day 1 right there. We did that, followed by day 3 is a gap up. See how there's a gap right there, and a close over day 2's high. So we did that right there. That was our entry, and you can see we bottom ticked it right there. We called the bottom right there. So that's the gist of this pattern here. There's more to it. Only the clients in the premium membership community get that full strategy. But again, that's the gist of it right there, and you can see it really works. It really works wonders because, as you can see, we headed higher here. We ended up taking half of our profits right here at this resistance because this was the gap down right there. Half of the profits there, and this was an options trade. And we ended up doubling our money here we exited the last half of our position pretty much at the high of the day. Was it 347.40? Yeah, 34.47 was where we exited. The high was 34.48. So we exited 1 cent off of the high of the day here. And the reason we exited up here, first of all, you got to understand when you're trading stocks here that have generally been in a downtrend. We've been in a downtrend here on AT&T for a while. I mean, since 2016, it's been heading lower. All right, so all these kind of pops have gotten sold into drastically. Okay, gap downs, huge gap downs. So that's why we're a little. We want to kind of take profits along the way. That's always a good idea, but also understand that even though we bottom ticked this bottom, understand the general trend here. The general trend, the overall trend is down. So you just kind of got to keep that in mind when you're trading really anything. Okay, so the reason why we exited up here is because it was previous support right there. All right, and the gap fills just above that level, right up there, and so that's why we kind of took profits at the high of the day today at about 34.47. So moving forward with AT&T, excuse me, we broke over this downtrend line. All right, guys. So we broke over, started here, rejected there. Here you can clearly see it reacting these 2 days right here to it. Finally, we broke over it right here. So we could be seeing some higher prices here. We could be seeing some higher prices. It could come up to fill this gap at about 35 bucks. And again, we traded the options here on this one. So the reason we take profits here quickly is because we've got theta. It's decaying, time decay. And we don't like to hold forever here. So that's kind of, but if you're trading the stock, you can definitely treat it differently. We've got the gap fill that may want to happen. So it may want to come up here, fill this gap, and then we'll kind of see how it reacts from there moving forward. So the next one we're going to take a look at, I'm going to look at my notes, is CVS. CVS, this is another one here that we are actually currently long on. We entered on this day right here, and if you notice something familiar, it's that 3-day pattern. Again, there's more to it than just these 3 days, but this is the gist of it. 1 day, day 2 closes below day 1's low, followed by day 3, gaps up. This is just a baby gap right here. And just like the store, and if you have kids like I do, then that joke will mean something to you. If not, it's going to go right over your head. So we've got a gap up, baby gap, close over the previous day's high right there. That's 3-day pattern. 1, 2, 3. That's where we entered right there. And as you can see, a nice big move up since then. But now, I think it's going to continue higher. We're actually still holding this position. And we broke over this little downtrend line. It started there. You can see clearly several rejections right here. And then we broke over that right here. We're back above the 20-day and the 50-day moving average. And as you can see, the Bollinger Bands are really, really tight. Bollinger Bands are really, really tight. So I think it can really get a nice little move to the upside. Our first target is 70. Based off of these these previous highs that we saw right here in April. The next one we're going to take a look at, let's see, Goldman Sachs. And this is another one right here that we're long and we're in the green nicely on. Again, here's that 3-day pattern, guys. Day 1, day 2 closes below day 1's low, followed by a gap up and a close over the previous day's high right there that we did. So that was the signal. That's where we entered. And as you can see, it's headed higher since. We also, not only that, but if you look here, we also have a bounce off of a major support. This is the volume point of control, this red bar over here. This is volume by price, okay? Similar to volume profile. Similar to volume profile. And what it is it shows you where volume has been traded by price point, rather than these bars down here are volume by day. So each bar represents a day of volume, whereas these bars over here represent the volume at a particular price. So the reason we use this is because if a lot of volume has been traded at a particular price level, don't you think that that's important? Yeah, it's definitely important. So that's why this is the volume point of control. And when you're above a volume point of control, it's support. So we came down into this volume point of control support, bounced nicely off of this trend line too. There's a hit, there's a hit. Here we are again against that hit right there. We also have a falling wedge pattern. This is a bullish pattern here. Here's the bottom of that wedge. Here's the top of that wedge. We broke over that right here. All right, guys. Broke over that today. Was the first time we actually closed over that level here, guys. And I think from here, I think the Goldman Sachs is going to continue higher here. And myself and my members are going to continue making money on this trade. The next one we're going to take a look at is McDonald's. And McDonald's, this is another one that we traded here. And again, guys, we don't only trade this pattern here, but it just so happens that we saw a lot of this 3-day pattern here just recently. So here's the 3-day pattern right here. Day 1, day 2 closes below day 1's low, followed by day 3, gap up, close over the previous day's high right there. That was our entry right there. And we were targeting, the first target was up here near these previous highs right there. That's where we sold half of it on this day right here. We actually sold a little bit higher than that. And then the second profit that we took was up here at this resistance. You can see it was previous support right there, turned into resistance. And as you can see, we sold up there. As you can see, big time hit against that resistance level. That's why we draw these lines. That's why we draw these support and resistance line, guys, because they matter. So now, what can you do with McDonald's? Well, McDonald's to me is still bullish here, and we've got a lot of support below us, right about here at about 166, or oh, I'm sorry, about 165. Let's call it 165 is going to be that pretty good support against that level. It was previous resistance there, here, here. Finally, we broke over that level right here. So we could be looking at a bounce somewhere around here, even down to, let's call it about 163 approximately, is going to be that level there that you want to be looking for bounces on McDonald's. So thank you for stopping by. I really appreciate it. And I hope that I provided a lot of value to you. That's why we make these videos, is so that I can help you learn and grow as a trader, and most importantly, help you navigate the market and make money in the market. Now, if you want to take your trading up a notch, if you want to level up, and if you want to start making real money in the market, if you want to start making consistent money in the market and having a pro trader in your back pocket at all times, then you need to join, guys. You need to join because you're going to be having these winning trade alerts delivered directly to your cell phone in real time, so that you can start saying goodbye to losing money in the market. You can say goodbye to doing all this analysis and mulling over all these charts, trying to figure out a way to make money in the market, and say hello to consistent money in the market, consistent profitability. And that's what you can find when you sign up and join the premium membership community. And again, we're raising the prices here, guys, so I don't want you to miss out. Take this opportunity while the rates are still really low, and you can start receiving instant access to these trading alerts as soon as the market opens, and you can get started making money in the market right away. This is Taylor. I'm signing off here, and I look forward to seeing you inside the membership.